It has been 1092 days since I bought my first Alibaba share. So this is the screenshot that I retrieved from my old broker. Buying 6 shares at 220 each for around 1.3 thousand US dollars. Man, good old times when Alibaba was trading at a triple digit price tag. But then, look at these fees that are charged by these dinosaur platforms. More than 9 US dollars per trade. Insane. Anyhow, it's been close to 3 years holding on to Alibaba, and here's my reflection. So if you notice the date that I bought it, it was actually one day before Christmas. So I think a song pretty much sums up most of my feelings. Last Christmas, I gave you my heart. The very next day, you sold it on eBay. So it has been nothing but a heartache. Jokes aside, I hope that for fellow heartbroken shareholders, you can still take the time off to enjoy the festive seasons with your loved ones. Now, back to our reflection. First, I think I can speak for most investors here. So no one actually expected the bear market to persist for such an extended period of time. So I believe most of us were actually ready to weather the storm for 1 year, maximum 2 years. But who knew and who would have expected for more than 3 years now? Not forgetting that most of you are probably air quotes value investors, and you guys weren't even chasing Alibaba when they were pushing through their all-time highs at like $300+, but instead buying it when it was actually going down. So at least from my entry, Baba was actually down a good 20% from its previous highs of close to $310. And from 220, they of course proceeded to go down by another 75% from my entry price. So you will never know what to expect from the stock market. Second, I think for most investors, there is a natural instinct for comparisons amongst human beings. So since young, we compare our grades, we compare our schools, we compare our family environment, our jobs, and even our investing results. And because of this huge disparity in performance, many investors who had Chinese exposure definitely underperformed their peers in the last 3 years. Whether is it their peers in the US market, in the property market, in the crypto market, you name it, we probably lost to them all. And most are probably feeling down or even lousy about their decision. So speaking from personal experience, I can attest to the fact that it is definitely embarrassing to talk about having a vested interest in Chinese stocks at a party with friends over the last 2 years. However, if history do rhymes, those are usually the best time to buy more. So I don't think your decision to buy or sell a stock should be based on what other people think or what other people say. Investing, it's a long game. So we won't really know who wins until the last bell rings. Weibo is back with something even more amazing. So they have an invitee-only campaign for new users. So new users to Weibo who uses my link to join Weibo now can fund and maintain any amount in their Weibo account for 30 days and win 10 fractional shares worth between 30 to 5,000 US dollars. So if you sign up on your own, you will only get 2 free shares instead of the 10. So remember to sign up with the link below now. Also, their Money Boo promotion will grant those who fund over US $2,000 and fulfill the requirements of maintaining it and activating Money Boo, you are then entitled to cash rewards worth up to 3,000 US dollars. So remember to check out their latest promotion. Also, if you intend to sharpen your investment knowledge, you can explore Weibo's Learning Center. At here, you'll be able to take advantage of Weibo's in-house trade features, but also learn more about different investment strategies to essentially enrich your investing and trading knowledge. So you can head over to the Markets tab, click on to Learn, and you'll be able to access a myriad of different articles and lessons from beginner to expert. So you can even participate in their 1 point a day campaign to make sure that you are learning something new every day. And since everything is on the same app, you can put what you learn into practice immediately. So for those without a Weibo account today, what are you waiting for? Link is in the description. Thank you Weibo for sponsoring this video. Third, investing is a heart-wrenching game. So it plays with your emotions, it screws with your logic, and sometimes it might even destroy your retirement plan. Okay, I'm joking on the last point. But please, for those of you out there who are a little bit more senior, go consult a financial advisor, get your retirement planning needs covered. If you want to stock pick, you can, but please do so responsibly. So from my observation at least, if you want to be remotely effective in picking winning stocks, you need an immense amount of luck and also a certain type of personality. So as the stock market is not a simple line going 45 degrees to the right, you'll be challenged with a boatload of volatility and uneasiness, sometimes or even most of the times, second guessing yourself. You need a certain level of arrogance, a certain level of stubbornness to hold on to your position, even when the market is telling you that you're wrong. Of course, it should ideally be grounded in facts and logic rather than purely being stubborn. But I guess time will tell. So like the saying goes, if you can't handle me at my worst, you don't deserve me at my best. So talk to the investors that were in Meta platforms, Nvidia, Palantir, etc. They've all seen their fair share of drawdown. And if they have paper handed midway, they would not be able to enjoy the upside. Of course, I'm not asserting that Alibaba will be guaranteed to have those kind of returns, but I'm emphasizing that every stock will have its ups and downs, and the real challenge comes when the stock is actually beaten down and everybody around you seems to be giving up. Fourth, I think many of us have our own predictions of how the stock price will move in accordance to our expectations for future events. Most, if not all of us, buy a stock because we see value in it and expect the share price to actually appreciate in time. So we don't invest in the stock market because we want to lose money. We often forget that there is a second layer to this expectation, which is how the overall market would react to the particular event itself. So stock prices are not necessarily determined by events, but more so how investors react to those events. So to give an example, many Alibaba bag holders probably had the expectation that, hey, both the tech crackdown and the COVID lockdown in China would be transitory. We are going to see brighter days ahead of us. The funny thing is, even though both events are true, and they have actually proven to be true, the share price continues to stay beaten down. So when Alibaba is stacking up their balance sheet with cash and cash equivalent, investors say that, oh, the cash pile is probably fake because the Chinese like to cook their books. When Alibaba issues out a dividend, people say that it's too little. It's at a 1.25, 1.5% yield. When they buy back their shares, they say that it's too slow. When Alibaba's growth went negative for one quarter, they say that it's the end for Chinese companies. It's a value trap. And when Alibaba has resumed growth and margins started expanding again, they say that, Alibaba is no longer what they used to be. So the story never ends. So I think rather than engaging with this back and forth, with the goalposts consistently moving, it is more useful to invest based on principles. So it's true that the share price has underperformed over the last 3, 5 or even 10 years. But if you are really focused on the company, then focus on the company's performance. Don't let the share price fluctuation affect your opinion and impression of the company. Fifth, I've questioned myself along this journey if any of this emotional gyration is even necessary. So when I look at my own portfolio over the last year or so, most of my US names are up by quite a fair bit. So as long as you bought the big names in the US market, you have probably done pretty well for 2023. Basically, stocks only go up, right? So I've asked myself this question multiple times on whether there's even a point to venture out of the US market. Because it seems like if you are able to pick decent US companies, most of them will probably just go up in the long term. So just like the ironclad advice floating on the internet, telling most laymen to just close your eyes, dump your money in the S&P 500. Even though you might not know what you're doing, you don't know what you're buying into, but at least it has a track record of going up for the last 100 years, right? So for me at least, I do enjoy the process of picking stocks, and I think that I've really gained a lot of insights and learnings of the business world through looking at it from the lens of an investor. Honestly, I don't think I'll be stopping anytime soon, and I'll definitely only allocate capital based on my framework and when I see value in it. And of course, we all like to prove that we're smarter than the market. So beating the index is one of my side quests. So what other reflections do you have after holding on to Alibaba for quite some time now? Share in the comment section below, and I'll see you in the next video, and more importantly, I'll see you on the moon. Goodbye.